Many find the idea of investing in farmland extremely appealing. It produces the most essential product, the food we eat. It has an income stream that appreciates with inflation, and it builds underlying equity appreciation at an attractive rate. But how do you buy it? I mean, short of purchasing a farm and becoming a farmer yourself. Well, we answer that and a lot more in today's video, so keep watching. Welcome. I'm Adam Taggart, founder of Wealthion, where we bring you the latest perspective and wisdom from the world's top experts in investing, economics, and personal finance. Today's interview was originally recorded back in March, but since then, there's been a massive commodities boom, and subsequently, the topic of investing in farmland has become red hot. So if that's of interest to you, you're going to find this discussion quite valuable. Before we play it though, I just want to give folks a quick reminder. Wealthion's online conference on June 5th is coming up fast. It's going to be an entire day hearing from many of the world's best minds in money and finance, each predicting what they see the market doing from here and what they advise investors like you do today to position for it. The speaker lineup is amazing. Just to name a few, we'll have Grant Williams, Stephanie Pomboy, Lacey Hunt, Lynn Alden, Matt Taibbi, Mike Maloney. Folks, it is really going to be fantastic. And don't worry if you can't watch the event when it airs live on June 5th. A replay video of the entire conference will be sent to everybody who registers afterwards. Oh, and speaking of registering, if you're interested in this, you should register for it now because the early bird price discount expires at the end of the month. So go to wealthion.com/conference where you can learn more about the lineup, the agenda, and learn how to register for this event. All right, with that out of the way, let's get straight to today's interview with farmland investor Craig Wichner. This week, we're joined by Craig Wichner. Craig is the managing director of Farmland LP, which is a fund that goes out and purchases farmland, usually conventional farmland, across the U.S. West Coast, and takes that farmland and over the years builds it up to using sustainable farming practices, converts it from conventional soil to organic soil, and manages the farmland with, according to the tenets of sustainability, as opposed to like the monocrop, heavy fertilizer inputs of big ag. So anyways, Craig, super glad to have you here on the program today.
Great to be here. Good to see you, Adam.
Good to see you too. All right, Craig. Well, so I wanted to give our viewers an update on just sort of the state of investing in farmland today. I know you run a particular fund, like I mentioned, and we can maybe talk a little bit about that fund later on in the discussion. But if we could just sort of zoom up to a high level here, farmland is an asset class that a lot of Peak Prosperity readers and viewers that they have a high appreciation for. It really sort of fits in the bullseye of the type of capital that they'd like to have their investment dollars going into. It's productive, it is regenerative if done right, no matter what happens, you own the underlying land, right? That's in a world where you're concerned about inflation and whatnot. That is a really important quality for farmland to have. So for folks that are interested in this, though, it's not the easiest thing to invest in. It's not necessarily like buying a share of Tesla, right? So could you just do us a favor and kind of at a macro level, tell us what's going on in the industry, and then maybe we can talk about the different ways that people can participate in farmland, short of actually buying their own farm and having to run it and farm it themselves.
Great. Farmland is a fun and amazing asset class, and it's really not very well understood. And so I'll start by just providing some context on the asset class. And first, its size. So the US has about 25% of the world's high quality farmland. And that farmland in the US is worth $2.7 trillion. That's about the same economic value as all of the apartment buildings in the US. Or all of the office buildings in the US. And 40% of farmland is leased. So farmland is commercial real estate, just like those other asset classes. Some other interesting points about it is that it's a very underleveraged asset class. Of that $2.7 trillion, there's only 14% debt on the entire asset class. So this means, one, that it's not correlated with the debt markets. And some people, particularly listeners, might feel that's a positive. Certainly is a positive for me, not being correlated with it. But it also means that as those debt levels increase, that will be a further tailwind for increased appreciation on the asset class. And if you think of single family homes, the price of debt and the availability of debt for single family homes drives up their price. Farmland has just simply not been affected by those tailwinds up until now. Another thing that's interesting about farmland is that only 1% of farmland is institutionally owned. So really most farmland is bought and sold neighbor to neighbor. And what that means is that there's a lot of opportunities to buy farmland and add value to it, to transform it to, for example, growing higher value crops. And there's really just not a lot of competition as we would normally think of compared to multifamily or office buildings. We're one of the top 15 largest farmland managers in the U.S. and the largest focused on organic and regenerative agriculture. So it's just a pretty small group of managers in this space.
All right. Lots of interesting points there. Interesting that 40% at least. 40% is leased. You said it's like commercial real estate. Commercial real estate is, I think folks are concerned about the prospects of normal commercial real estate right now, post-coronavirus, right, where businesses have been shut down without renters for a while now. And a lot of companies have realized that they can now effectively and efficiently operate their companies virtually. And so there's a lot of office space that's maybe in danger of going unleased going forward. Obviously not true at all in the farmland space. People need to eat, and that's where the food is coming from. So can you tell us a little bit about just sort of the demand right now for farmland, and for the food that the farmland grows? I know in particular, Farmland LP is focused on the organic food market. I know you grow, not everything you grow is organic, but your general goal is to grow as much organic as you can. And I know that there is, I believe right now, sort of overwhelming demand as far as the eye can see for organic product, just given, world demand, and given that there's so few organic acres relative to the overall acreages of farmland. So, at a high level, what are the big trends right now that are driving the investing going on in farmland?
That's great. So there's a few different sectors within farmland. And so you would think about kind of annual crops or commodity crops. 53% of U.S. farmland grows two commodity crops, corn and soy. So a lot of people tend to just look at those market trends and just apply them to all farmland in general. But that would be like lumping together apartment buildings, office buildings, and warehouse spaces in Class A markets and Class 3 markets all together. You really have to kind of dig a little bit deeper in that. And then another market sector is permanent crops. For example, those are trees that you might plant, or vineyards or blueberries, things that you plant once and then they grow over time and you harvest them for decades. And then also there's specialty crops like lettuce and tomatoes. Those you might have seen App Harvest go public. We should ask me about App Harvest after this.
Okay.
We'll talk about that. But regarding the overall market sector, commodity row crops, for example, have been flat for the past 5 years or so. If you remember the tariffs that were in place as well. But overall, the market has been pretty suppressed. Now you're actually seeing strength in that commodity market sector. On the permanent crop side, the demand in general is very strong, both for currently cash flowing commodity crops as well, or permanent crops, as well as for new crops that are going in. And there's continued strong demand for the specialty crops. The organic market, for example, Historically, 50% of the US food budget is spent at home and 50% out. During the pandemic, that shifted to around 70% of food being sold at home. And the organic markets really were already constrained by the amount of farmland available that was organic. And so just everything has gotten maxed out. It's even more impacted. 6% of the U.S. food budget, about $40 billion a year, is spent on organic food, and only 1% of U.S. farmland is certified organic. The organic food market is growing at double-digit rates, and organic farmland is only being converted at single-digit rates, about half the rate that the overall market is growing. So really a tremendous amount of pressure in general on our food system. That's looking at the short-term trends. If you look out 10, 20, 50 years, you have continued population growth, and that continues to drive demand. And you have continued growth. Whatever cities and real estate expands, it's usually being built over farmland. So you really do have this shrinking pool of farmland while the rest of the real economy grows. And then you have climate change. And climate change will really make some areas, if not unfarmable, dramatically reduce the value of the crops that they can grow there, while some other areas will benefit, but really takes a lot of understanding in order to forecast those trends.
All right, so you're basically saying that farmland in general is under pressure, right? Whether it's through development encroachment, whether it's through climate change, et cetera. At the same time, you say that 6% of the current grocery budget is spent on organic food, yet only 1% of our acreage is organic, is certified organic. There's also population growth, and there's also, I think, sort of implied in your growth comments there, the sense that there are other nations that are, I don't know what the right term is, but gentrifying. I mean, they're being able to begin to afford more of an American middle class lifestyle than they have in the past, and so that probably just means more competition for that limited supply. So it seems like, in some ways, sort of an investor's fantasy, where you've got a product with limited growth opportunity, but overwhelming demand that's probably only going to continue growing. So. Is that translating into high prices for farmland, particularly organic farmland? And is there value still to be found in the space?
Prices and value are two different things, and it's really interesting to look at this. So prices for farmland are going up, and even through the 2008 crash. The economic crash, you did see commercial real estate drop significantly during that time, but farmland was flat. Farmland prices were unaffected by that. So historically, and that's true going way back in time, it just simply, the farmland prices are not correlated with the stock market or the debt markets or other markets like that. They're fundamentally driven by people making more babies and people wanting more meat and a higher quality diet. That's what puts pressure on farmland. And so what we are seeing in farmland is increasing prices, but it's driven by increasing rents on that farmland. So cap rates are staying pretty flat for farmland, but it's actually it's basically inflation. So fundamentally, the value of farmland is based on the value of the crops that you grow on that land. So as food prices increase, for example, that translates to a natural uplift in the value of the crops grown on the land and the value of the rent that's generated off of that land. And so that's why prices have gone up over the past, over the past 85 years, farmland has delivered 11% annualized return year after year, half from cash flow, half from appreciation. So it is this wonderful, stable, steady asset class that delivers both appreciation and cash flow over time. Um, uh, and and then you have these opportunities really to add value to that and increase, switch from the low value commodity crops to organic crops or other high value crops to further bump that up.
All right, great, really well said, and it echoes a lot of what we've said when we've had experts in real estate on who talk about, one of the benefits of real estate as an investment class is that the income that you get from it is inflation adjusting, right? So that as inflation increases, you can increase your rents, and you as the property owner are, somewhat insulated against the vagaries of inflation because your rents are keeping up with it. Now, in real estate, you have to, you can benefit from that way if you can always rent your property. But you could have oversupply in a certain area, or a key employer leaves, or something like that, and you can have capacity issues where you're not able to fully, fill your properties. But farmland is quite different, right? Especially in organic product, as you're talking about here. There really isn't, the potential for somebody to go and discover a whole bunch of unused, certified organic farmland. It just doesn't exist, right? So that scarcity is really helping you there too. All right, great. Well, so 11% per year annualized return. Sounds like it said it didn't really get impacted that much during the great financial crisis back in 2008, 2009. So it's kind of almost like, what's not to like about it here, right? And then of course, Craig, you talk about the opportunity to do a lot of what your fund does, which is buy land that's maybe not being put to its best use, right? It's being over-farmed, burned out with the chemical-based fertilizers and the monocropping and kind of the evils of a lot of the big ag conventional processes. And you can restore that land and restore the micronutrient content of the soil. You can farm a whole bunch of different types of products, both produce, but also livestock as well. So you can have this really highly diversified portfolio of products that are coming off of the land that you're also able to charge higher premia and make higher margin on, because it's all organic, certified and whatnot. So for people that find this interesting, and I kind of feel like, why wouldn't you after everything that we just listed there? What are the options that are available to them? Again, short of buying a farm and becoming a farmer themselves.
Which they could do if they have $10 million that they want to. So the average commodity farmer has about $8.5 million worth of land and equipment and makes $250,000 a year. So that's the option if you want.
Doesn't sound like a great deal.
It doesn't sound like a great deal if you're looking at it from an investment class. But it does. There are good opportunities to invest in. And actually, I just want to get the app harvest comparison, because people think of that as growing food. And I did some quick analysis on that.
Right. I'm sorry to interrupt you, Craig, but can you just explain what App Harvest is for the people that don't know?
Exactly. It was just, yes. So App Harvest is a company that basically builds giant vertical farms or, high-end greenhouses. They recently went public at about $1 billion valuation, and it was a SPAC transaction. So kind of ticked off all the hype things. And basically, if you look at their numbers, they've built a 60-acre greenhouse to grow beefsteak tomatoes, large tomatoes, and they're going to just keep doing that in perpetuity. The problem is the same as any other of the vertical farms that I've looked at. It costs around $1.5 to $3.5 million of capex per acre in order to grow these crops year after year. And so if you look at their 60-acre facility, I could buy 10,000 acres of beautiful irrigated farmland for the price of a 60-acre greenhouse that will only grow tomatoes year after year after year. And one question is, how do you pollinate the tomatoes in a 60-acre greenhouse year after year? But that's a little more esoteric question. But really, would you, so fast forward 10 years, would you rather have 10,000 acres of wonderful irrigated farmland with great water rights as well, very key part here. Farmland is appreciating. You can grow a basket of, we produce over 40 different crops on our 15,000 acres. So a lot of crop diversity, a lot of crop choice, land is appreciating. Or would you rather in 10 years own a 10-year-old depreciating greenhouse? It's a pretty simple option to me.
Right. It does. When you put it that way, it seems like an easy choice.
It's a pretty easy choice. So what are the options for the normal person to invest in farmland? Again, so out of the $2.7 trillion worth of farmland, only about 26 billion, about 1% of farmland is institutionally owned. So there just aren't a lot of players in this space. There's two publicly traded funds. One is Gladstone Land, and almost all of the farmland funds just do basically sale leasebacks. So they'll buy a piece of farmland and lease it back to the operator and collect a rent on that. And there's value from an economy of scale standpoint that happens there, but there's no value in terms of converting from one cropping system to another. They're not really investing in that asset and improving those assets. So Gladstone Land is one company. You can, if you're looking for people who are actually adding value to land, for example, where you're converting land from commodity crops to permanent crops, for example, then Acre Trader or Farm Together are a couple of kind of crowdfunding options where Acre Trader and Farm Together act as brokers on there. They find an operator on the back end who has some value-added plan there, and then they raise capital basically for that. And they're essentially incentivized as brokers on that. And then there are people like us who, not a lot of people like us, but there are people who buy the farmland. And so what we do is we raise capital, buy farmland, and then take it through a value add conversion period. We get compensated on the back end after we've added the value. So we're very long-term investors from that perspective.
All right, great. And I want to talk a little bit about that value add process in just a second. So for folks that aren't familiar with Acre Trader or Farm Together, I'm less familiar with Farm Together, but Acre Trader, I have monitored a bit. And what's nice about those crowdfunding sites is you don't need to be an accredited investor to participate in these offerings. And essentially what they do is when they have an investment opportunity where usually it's a parcel that's going to be farmed by a particular farmer for a certain purpose. They just kind of put it up there and they say, okay, look, we're going to put a pecan orchard on these 50 acres. And the people that are running it, have 3 other pecan orchard farms. They know how to do this. And here's the projected return. And, a share could be anything from, $3,000 to $12,000. I mean, it's not a ton of money. And they have new deals coming in kind of almost every week or 2 weeks or whatever, from what I can tell. I also can tell too that they go pretty quickly. Not saying that that's because they're exceptionally great values. I think we're just sort of in this period of time where there's just so much money sloshing around. And again, farmland is a harder asset to own. But anyways, check those out, watch a couple of the deals come through. You'll watch them get snapped up pretty quickly, but eventually you might find one that you like. And again, you don't have to throw that much money into it if you want to just sort of dabble at first. You mentioned Gladstone Land. Is that like a publicly traded ETF or just a company itself, just a publicly traded stock?
It's a publicly traded REIT, so real estate investment trust. And so it's a publicly traded vehicle, so it correlates with the debt markets more than it would otherwise. But that's a way of getting involved in the sale leasebacks, and they've actually done well recently. Their stock has done well. Acre Trader. So when you're investing in Acre Trader or Farm Together, any one of those deals, it's up to you to build your own diversified portfolio on that land. So you'll be investing each time on one piece of land, generally one crop, one manager on that. And so you have to create your own diversification. You mentioned pecans. Actually, a friend of mine just sent me something over the weekend where they were looking at it, and you really have to do your own due diligence on this stuff. This was basically putting permanent crops where they had not been in the past, and where it's very speculative. I basically didn't like the piece of dirt. I was very concerned actually about the whole thing being washed away. And people really need to talk to people who know what they're doing on these asset classes before they put their money in. There are, as long as Acre Trader or someone else is doing a lot of good due diligence on it, and you have that essentially that adversarial process, that's adversarial setting the price, adversarial determining that the operator is good, adversarial determining that the land is good, and have all that due diligence come together, that's great. But I do think that there's some stuff that shouldn't be made available to people who aren't experts and know what they're getting into.
Yeah, and maybe that is one of the risks of these crowdfunding platforms is there's so many more options than were previously available. Vetting all of them becomes maybe a little bit more of a challenge. And I know that at least Acre Trader, but probably Farm Together too, they're relatively new, so they don't have a lot of exits yet. So we don't have a lot of data to see if these have actually performed the way that they, the initial sort of projections estimated that they might. All right, so let's switch over now to the kind of private managed funds like yours, where they have a kind of a mission, right? Where each fund is probably quite different, but yours is we want to go out and we want to find really good quality, like farmland with really good quality bones, right? That has the sort of the type of soil we want, the type of topography, climate, et cetera, water rights. And I'd love it if you could talk about those for a moment and how important they are. But maybe also too, it's not being used to its maximal best use. And so you guys are going to come in, you're going to spend some time healing, restoring, improving the land itself, and then you're going to start managing it. In a way you talked earlier about, the bigger sort of portfolios of properties. They have economies of scale. You can afford to invest in infrastructure that the individual farmers that you might be leasing the land to couldn't invest in themselves. And so you're really creating kind of the best of both worlds for everybody, for the fund itself, for the farmers farming the land, for the investors, and I guess ultimately for the people who are eating the food that comes off it. So just kind of rattle through kind of your mission and your approach. And maybe a good question is how do you determine, what do you look for in a parcel of land, and how do you determine if it's a good one for you to buy?
To summarize it, we look for great sunshine, dirt, and water. So
that's pretty simple.
Exactly. Sunshine is a great growing climate. Dirt is high quality soils that have the capability of growing high value crops on them. And water is both the physical access to water as well as legal ownership over that water, the water rights on that land. And we do a lot of macro assessment. So water is a strategic focus of ours, in part based on our view on climate change. So we've been following the science of climate change for 20 years, and we've identified areas that are going to be harmed by climate change and that areas that should do better. So we're very focused on areas that we think are going to do at least as well or better in this era of climate change. And the value of water and water rights is key on that. And the U.S., basically, water is a tremendously mispriced asset in the U.S. So, I'll tell you about the farmland behind me, which is part of our second fund, is to give you an example of a real concrete example of water and water rights and how we add value. So this is a 6,000 acre property in Walla Walla, Washington. 5,500 acres is farmable, and there's water rights on 1,800 acres. On that. And we've got a lot of water on those 1,800 acres. And the rest of the ground is growing dryland wheat. Okay, low value crop, but it's beautiful, productive farmland. That's the property you see behind me. So on the 1,800 acres, for example, if you grow corn on that land, you'll generate $1,000 an acre. And it takes 3 acre feet worth of water in order to grow one corn crop. 1 acre is the size of a football field. 1 acre foot of water is 1 foot deep over that football field. And corn requires 3 acre feet worth of water, 3 foot deep over that football field to generate $1,000 in revenue for that corn. Well, wine grapes only require 1.5 foot worth of water. Okay, wine grapes also generate $8,000 to $10,000 an acre in revenue at 40 to 50% margins. So what we're doing is basically doing water spreading to increase the total number of irrigated acres and convert from commodity corn to wine grapes and other crops. So I can turn that 1 acre worth of corn, $1,000 an acre worth of corn, into $16,000 to $20,000 worth of wine grapes, massively increasing the cash flow that's generated from the same amount of water. And at the same time, the land values are positively impacted as well. So when we talk about farmland, the value of that land is based on the value of the crops that you grow on that land. So dryland wheat ground behind me, $900 an acre. If I move the corn production as is onto this land, that land would be worth $12,000 an acre. Same dirt, just added water, changed the crop. If this land though happens to be really wonderfully suitable to wine grapes, okay, permanent crops like wine grapes, that ground goes for $20,000 to $25,000 an acre. So same water, same dirt, different crop. So this is basically an example of what we see when we're looking at farmland is wonderful soils in great growing climates with wonderful water rights. And we're just transforming them from low value commodity crops to high value crops and increasing cash flow. As well as creating value, creating appreciation by converting from $900 an acre dryland wheat to $20,000 to $25,000 an acre vineyard land.
All right, so that's a great description, sort of the arbitrage, I guess, that's available in this space. If you can figure out what the land can be better used for, both in terms of what it will grow, but what that product will yield in terms of price and margin, it can be transformational, like you just walked us through, right? From 900 an acre to 12,000, whatever, to 28,000. Now, obviously, one of the reasons why people plant crops like corn and whatnot, besides the fact that just people need to eat them and whatnot, but is that you can grow it in a season. Right, you know that you can get paid at the end of the summer, whereas putting in permanent crops, wine grapes, nut trees, blueberry bushes, et cetera, there's a period of time where they have to grow for a couple of years before they get mature enough to start producing at commercial scale. So the investor has to sort of be willing to accept a couple of years of no to low return to then get those higher returns, correct?
That's absolutely right. And that's what essentially creates this surprising barrier to me from converting from commodity crops to higher value crops, or even just taking land through a 3-year organic conversion period. It's really challenging for a commodity corn farmer, for example, who's making debt payments on their new combine to shrink the acres that they're going to grow in corn, go to a more diverse commodity, more diverse basket of crops, and spend 3 years getting that land certified organic. Our investors have to be ready to not generate cash flow for 2 to 3 years during that conversion period. We're planting crops, we're generating revenues, et cetera, but there aren't investor distributions available during that time frame. But as long as your time frame is 5 years or longer, you get a wonderful IRR on that. And as an investor, we, you know, we all see, hey, you know what? If my investment horizon is 5 years or 10 years or 30 years, going a few years without cash flow is a wonderful trade-off. But for those who are very focused on the day after day, it is more challenging, and it helps create these great opportunities, whether you're converting to organic or to permanent crops.
Great. And I do want to talk about that more for a second here, because we've kind of been zeroing in on the profitability of the approach. But there also, as you said, we're talking about improving the land, and it's not just improving it, just to make an additional buck off of it, but there is somewhat of a mission behind the fund too, right? Of doing well by doing right, which is, you're taking this land, which, maybe not, maybe sort of be getting abused by kind of the strip mining, approach of conventional farming, and instead, to get it up to organic status. And maybe you could just really briefly, just 30 seconds or so, tell people what's required for land to be upgraded from conventional to organic. But you're also putting in, permacultural installations like hedgerows and things like that support pollinators and the predators that eat the pests. And you're really kind of, you're leaving the earth better than it was when you bought it, correct?
Yeah, I mean, fundamentally, our mission is actually to demonstrate that sustainable and regenerative agriculture is more profitable than chemical dependent agriculture. My degree is in biochemistry and molecular biology. When we look at farmland, yes, we see this wonderful real asset of farmland, but we look at it as a biological system, and we know that actually if we take care of the soil's health, that it will be more productive. It'll be more resilient to climate change. It'll require fewer inputs on that ground in order to grow more crops. And we can get price premiums very easily by getting the land certified organic when we follow regenerative agriculture best practices. And so fundamentally, our business model is based on identifying that, all those commodity corn farmers are really locked into a system where they're focusing on farmland to generate maximum operating efficiencies by growing one crop year after year. But we know that the best way to generate productivity from farmland is actually to have a diverse crop rotations, both in a single year, a mosaic of crops growing on that land, and diversity across a 10-year crop rotation as well. That's when the soil's healthiest, and that's when the plants are happiest as well. So you get the increased yields. The challenge to that is that it's very difficult for one farmer to grow all those different crops and change it up year after year on there. And so that's where the economies of scale of what we do come from. So we map out the ideal crop rotations on that land. We get the land certified organic, and then we find the best farmers for any one particular crop in that rotation. So we might have pasture for 3 to 7 years and bring in great sheep and cattle tenants on that land. For the vegetable rotations, we'll find the best tomato farmer and the best sweet corn farmer and the best grain farmers as well. And we'll manage that farmland as essentially multi-tenant commercial real estate. working with the farmers, providing them with high quality farmland with great irrigation infrastructure that's already certified organic, so they can really scale up their organic production without having to buy a whole bunch of land, take it through a 3-year conversion process, and farm a multitude of crops. That's our responsibility, and that's what makes a great partnership in this. And this lesson, this is just a business lesson that's true. In the 70s, the US created the REIT laws, which allowed investors to invest in real assets. And that allowed companies to not have to build their own office buildings anymore. We have the Sears Tower because Sears had to build their own tower. Nowadays, you would never think of building your own office building if you wanted to grow a tech company, right? But that's the old model that we're forcing on the farmers. So we're actually just bringing a business structure from the 70s into 2021 and saying, you know what, we'll manage this high quality asset and we'll work with the best farmers so they can get the highest returns possible from these assets, while making sure the farmland is managed organically, regeneratively, and most productively, and generating the most soil health.
Well, that's just so inspiring and great. The real reason why we founded Peak Prosperity was to, make people aware of the unsustainability of sort of the status quo of society. And certainly food production and agriculture has a ton of unsustainability with it. It's to highlight new models that show that there's a better way to do this, right? And we've brought the folks from like Singing Frog Farms on to show what they do there, which is absolutely amazing. But it's a very small farm, right? It's 8-acre farm. I think they only farm 5 of the acres, and so a common sort of I don't want to call it a criticism, but people will say, hey, how scalable is that really, right? Well, you guys are showing that it can be done on thousands and thousands of acres. Like, how many acres do you have in the overall farmland portfolio between Fund 1 and Fund 2?
15,000 acres, about $175 million worth of farmland.
Okay. But I mean, that's a lot of land. And you guys are showing that these practices can be done at that type of scale. And so if it can be done at that type of scale, it can be adopted well throughout the industry, and hopefully eventually more and more of the industry is going to take note, whether it's because they're seeing the savings, the economies of scale that you're getting from this, or that their customers are demanding they go this way, right? And it's part about the demand for organic food and whatnot. All right, so we got to wrap things up here. Craig, I could go for easily another 2 hours here with you, and I'm sure people would love for us to continue to. So we'll have to bring you back on. I know one topic we didn't get to was sort of the role that technology is playing right now. And I know that you've educated me several times about how there's sort of a technology revolution going on, kind of a high tech revolution going on right now, that are doing things that people thought could never be done by machine, like picking berries and things like that, but also just intelligent water delivery and all sorts of things. So we'll have to save that for next time. As we part here, why don't you, if you could, just give 2 seconds about what's the status of Farmland LP's funds, and for people who want to learn more about you and the funds, where should they go?
Great. So the investors can go to www.farmlandlp.com to learn more. We are actually getting ready to close our second fund. We already own over $90 million worth of farmland in that fund. We're raising additional capital to do things that are accretive to it, such as, instead of leasing out vineyards and organic blueberry land, plant some of that land ourselves as well. We very successfully grow currently wine grapes and organic blueberries with Driscoll's, and it'll be accretive to the fund to plant those ourselves. So definitely encourage people to reach out to at farmlandlp.com and learn more about us.
All right. Well, thanks so much, Craig. Excellent discussion, and look forward to having you on again soon.
Great talking to you, Adam. Thanks.
We hope you enjoyed this interview with Farmland LP's Craig Wichner. If you found this interview valuable and you'd like to see more like it in the future, please take a second and click the subscribe button below, as well as the little bell icon right next to it if you haven't already. And if you're trying to make sense of how to invest in the coming future and would appreciate a free, no strings attached portfolio review by Wealthion's endorsed financial advisor, we'll tell you how to do that in just a few seconds, so stick around. Thanks for watching. If you'd like to schedule a consultation with one of the financial advisors at New Harbor Financial, simply go to Wealthion.com. These consultations are completely free and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given their latest market outlook. They're willing to do this because they care about protecting people's wealth, and because Wealthion has connected them with so many thoughtful investors just like you over the past decade. We started doing this because so many people have approached us in frustration, looking for a solution because they're feeling out of alignment or downright ridiculed by the standard financial advisors who have been managing their money. You know the type. The kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, "Don't worry, the market will always take care of you." For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing. We strongly believe that today's investors are best served working in partnership with a conscientious professional financial advisor who understands the risks in play. Now, we're agnostic which professional advisor you work with, as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you don't, or are having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. Now, for those about to ask, yes, there's a business relationship between Wealthion and New Harbor, which we've put in place to make sure everything is handled according to SEC regulations. All the details on this are clearly provided on the Wealthion.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to Wealthion.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.